Good morning, everyone. Happy Heart Day, Valentine's Day, Hallmark made up holiday, whatever you call it. Have a wonderful Heart Day. Make sure you tell someone that you love them, but that should be something you do every day, not just when you have to go buy a card. All right, anyway, here we are taking a look at the S&P futures. What do you see here? So Friday, let's back up to Thursday. Thursday, we had Fed comments. We were, kind of just trucking along, no big deal, kind of a boring day. Then Fed Bullard came out and talked about all of these rate hikes and what should be done. And wham, we went sailing down. The next day we came in and we're like, okay, well, we'll be okay. And we just kind of chopped around a little bit. And then news about Russia came out and pushed us way back down. Now, this morning, we're well off of our lows here, and that is off some positive comments coming out from Lavrov of Russia, saying basically that the talks continue. They felt them to be productive, and they want to continue more the diplomatic road here, and that sent us moving up. And I want to show you what that looks like, because as those comments came out, no kidding, this was it right here. So not that long ago, those comments came out a half an hour, 45 minutes ago, and wham, we went sailing up, and now we're just chopping to the side. The reason I want to point this out, for those of you who were trading a few years ago, and it was all about the trade talks. Anytime a news headline came out with China, U.S., and trade in it, the computers are looking for keywords. Either they're positive or they're negative, and we would, in a matter of one candle, get just whiplashed around on those comments. And that's kind of what we're seeing here. As soon as those comments come out, there's programs devised just to watch for that, and you'll either sell or buy depending on how the news goes. But then what happens a few minutes after that, or it may take 15-20 minutes, but then it kind of settles in, and that's what we're seeing here. Now the comments are actually probably really being looked at, and then the market will then make its next move. But overall, I point that out because it's really important to know that a lot of times we really are trading against machines. We had this talk a little bit last week because the question came up about, with all of, there's a lot more traders in the market, like you and I, the simple retail trader, and thanks to the pandemic, and that is true. But still, a majority, like a vast majority of buying and selling is done by programs. So I just point that out because of that, not for any other reason. It's the reality of it. So anyway, we have that going on. We also have something else happening in the market today, so kind of watch for this as well. We have there is a closed door meeting today by the FOMC, or by the Feds, and then we have FOMC later this week. So those are two things to really watch for. What is that meeting about? Are they looking at possibly raising rates earlier rather than later? Last week, Bullard said, we should do an emergency. It should be a 50-point rate hike. And I think they're getting in there to really kick the idea around of what to do with that. Do I believe that they're going to come in with a 50-point rate hike? I wish they would. Go ahead, rip the Band-Aid off. However, they didn't ask me. Although my phone's right here, they could call anytime. But go ahead, nip it in the bud, and then let the market set it out. Now, Bullard was really pushing for multiple and intra-meeting hikes, and that intra-meeting hikes, so in between the meetings, and I think that really freaked people out. I don't think they're going to do that. And immediately, the very next morning, we had pushback from other Fed voting members that said they do not support that. And I think that's where we're going to end. I think we're going to probably land on a 20, dip the toes in the water, still a little bit more dovish. And it's also important to remember that we're still doing those buybacks. So the quantitative easing is being tapered, right? So it's quantitative tightening that is still underway here. So I think that they would be a little bit harder pressed from a an economic standpoint to do both those things. But, you know, the Feds can do whatever they want. Again, they didn't ask me. So, okay. What am I watching here this morning? I've got a few here, and I want to, let me switch this on to something else. I want to take a look back at these travel charts. So this, you know, again, looking really good post earnings here on EXPE, and then just they started to sell some of it off, and then the news hit. And I don't believe that another great question that was asked is, do I think that the Russia-Ukraine is what's hurting travel? Not really. If there was a big problem in a very heavy travel destination, I'd be more apt to lean on that. But no, I don't think so. I think that these charts move just with the market. I am in UAL, and I continue to like these as we lift mask mandates. We are easing all kinds of those COVID restrictions, and people have the appetite and desire to get back out there and do things, right? To travel, take family on vacations. Maybe it's been a few years. So those are the things that I am watching. So I continue to like these. And the one I'm going to lean on here today is EXPE. I like this at the 190. Now these, I would look out to April. So that would be April 14th on most of these, because we're coming up. I like to have a good month between my buy and my expiration date, and we're coming up a little too close to that 1 month mark if we're taking the March 18th, right? So, but you know, take whichever one you want. I just really like this strike here. I like EXPE. I like this. I would take this today on an ORB, or a safer place would be right up here through 195. That would bring us back into the candle prior to earnings, and nice little flag here. All right, so EXPE, the 190. Another one that was a really good earnings winner and looked pretty good, again, until those comments. So, you know, you have to remember you're going to get caught in news probably both ways. DDOG came right back to close here right on its earnings candle. So I really like that. It's showing some relative strength in that particular sector. I know it doesn't look like it here on the chart, but overall during the day, I think it did fairly well. I like the 165s. All right, the basic materials have done well for us. We've played these a few times. Nucor, again, I'm going to say it's pretty much about every chart. It came down with the overall market, but it came down here. We still have a nice flag resting along the Fibonacci line. I like this over 118.50, and I like the 120s in Nucor. And UE. AA, another one. This one did not care. You had no idea that there were comments really made on Thursday from Bullard or anything happening there on Friday. Look at Nucor, just cruising along. Very nice here. I like this over the close from Friday or on an opening range break, because it looks like it's on the move here this morning. I like the 75s. All right, you know, Fed's coming up. We've been talking an awful lot about interest rates. Several of those are baked in, but WFC here is one of those that is more sensitive to interest rate hikes. And we have this beautiful move up. We'll see if this turns into a bull flag. I really like the potential of this becoming a confirmed bull flag. I like WFC at the 60. Again, I would like this over the close, which is actually down here, or if we come, maybe touch the Satan, push back up and play it as a reversal play. I like the WFC 60s. You can take a look at BAC as well. That's another one doing well. And I like AXP as well. I like the 190s and AXP. This looks like another bull flag setting up nicely. SoFi was another one that's moving. We just saw SoFi Stadium last night, so there you go. All right, another area to look at, going right back to energy. So we get caught in bad news all the time, right? We got caught in some news on Bullard's comments. Well, Friday, I happened to be in oil when the comments came out on regarding Ukraine and Russia, and that news happened to take us the other way. It's kind of a good little look that we get news that moves us both ways. We tend to focus on when it kicks our butt versus helping us, but XOM, beautiful move here. Much longer term this is, and a very nice bull flag. Now we're getting a little bit of a pullback on XOM this morning because of that news here out of Russia, but I still like energy longer term. We're still in winter here, and energy with inflation has definitely heated up. Get it? Heated, although this is gassed up. Yeah, okay. Anyway, kind of funny. I've got jokes all day long. CVX is another one to look here. I'm already in XOM, so CVX, I would look at the 135s. Also, natural gas. I don't trade nat gas very often. These prices have actually really increased. I would take a look at LNG. They do have earnings coming up, but I like LNG 120s. And CHK, this one's a little bit cheaper. I like CHK. We had a 3820 confirmed cross and push up off of the 20. I like the 70s in this one. All right, and lastly, go back to travel. Disney. We'll look for a bounce off the 50. Had really nice earnings. Sold it off, not a surprise, and moved back down with the market. But it's holding on to the 50 here, so looking for a little bit of a reversal there in Disney. I like the 150s on those as well. All right, that is it for me this morning. I hope you have a great day. Again, be cautious how exposed you are with these comments kind of pushing us around from out of Russia and Ukraine. Again, we don't want to get political, but this is a geopolitical issue, and it affects all of us. So watch out for those, and know that if you're exposed, well, we've seen it hit us both ways, right? So keep that in mind. And FOMC this week, so keep all of those things kind of in the back of your mind as you trade and take on risk. All right, hope you have an awesome Valentine's Day. I'll talk to you soon. Any questions? Reach out, Heather C. at givingtreetrading.com.